Alternative assets have grown in popularity in recent years as a supplement to investors' portfolios. In this learning objective, we define alternative investments and compare them with traditional asset classes. So in order to have a diversified portfolio, we need to have an appreciation for a range of different asset classes that are possible to access. Thus far in this course, we've focused on traditional assets like stocks and bonds, but there are a range of non-traditional assets that investors might also be able to access. Nowadays, assets tend to be classified into two distinct classes. They are those traditional assets and alternative investments. Now, with respect to alternative investments, there's no fundamental economic difference nor definition that we can use to be able to identify what these assets actually are and how we distinguish between traditional and alternative. But the best way to be able to define alternative investments is to look at some of their characteristics. So as a general rule, we tend to find alternative investments are less liquid than traditional assets. Often they're more difficult to value and we can't use traditional valuation methods. Often they'll have limited historical risk and return data. Alternative assets will have low correlation with traditional assets, and often also they'll have unique legal and tax implications. Now, these different characteristics are sometimes beneficial and sometimes to the detriment of alternative assets. So what sorts of assets comprise alternative investments? Well, while traditional asset classes include things like equities, bonds, both domestic and international equity, government bonds, and cash, alternative investments include things like tangible assets, so physical plant and property, commodities, so we can think of like coal, iron ore, gold, copper, etc. there, private equity funds, derivatives like futures and options contracts, structured credit products, investment funds like managed funds or exchange traded funds, and hedge funds. So just by looking across these different types of assets, we can see that there are distinct differences between the two. And as we proceed through this week's lecture, we'll discuss some of the benefits of investing in alternative investments and also some of the current trends in this area.